introductions, and then if I can find it on my screen, I'll turn it off as we go. Yep, there it is. All right. Thank you all for joining me this morning. I do this for you, not for me, by the way, so I'm glad you're here. Catherine's good to see you. I get it. Yep, Mike, I've signed up for that webinar as well. Again, I'm always learning, and um, you know, I think that you have to look at in total what your experiences are, and I do believe that one is shaped by those experiences, and I've continued to learn, and hopefully I'll continue to learn about how to improve my trading and my approach, and now my software as time goes on. So welcome to today. Um, this is going to be a little different than the last month one. It'll be about workflow as usual, and I'll go through the program and show you how I approach it, use it for top-down trading. I'll talk about where I think the markets are, and give you an update about my trading. And then, you know, hopefully I'll get some more people to sign up for the live meeting. I can tell you right now, there's probably going to be 7 people in the room plus me. I can hold 12. I've got a handful of people online. And for those that are online, thank you. Um, because without those online, I lose money on the meeting. And, I don't do the meeting to make money. I mean, trust me, I don't do the meeting to make money. And at least now, when my wife asks me why I'm doing the meetings, I can talk about, well, I have products to sell, so Praveen can get back on his investment in time. So look forward to seeing those that are going to be there. So if I get a couple more people to come to the meeting, that will be great. Um, a couple things. We launched the website. There's not much there yet. It's called marketmripro.com. We will be launching our Discord site so I can do some marked up charts and push them out during the day if I see something. Um, I don't plan on charging for anything except my software. All right. Um, if I end the live meetings, and again, my goal at the live meetings is not to lose money. Um, and and hopefully you'll leave the live meeting able to make more money. I go to a lot of live meetings, and I do think there's a big benefit from that. 2 weeks ago, I went to a meeting in Vegas. I don't gamble. I do like the restaurants, but I went to a VectorVest meeting. Why would I go to a VectorVest meeting? There are things I like about them, things I don't like about them. But what I like about them is they approach the market from a top-down perspective. But I usually go to see friends, and I saw a bunch of old friends. I met some new friends there as well. And again, probably recruited somebody to my live meeting by being there or to my software. And then last week, I went to the best bargain of the year. And I highly recommend it, especially if you're a West Coaster. Every year, the formerly known as the IBD meetup groups out in San Francisco, there's a bunch of them, and some great traders, Lee Tanner, Mike Scott, among others. They get together for an annual meeting, and this year they had Mike Webster live. He is so brilliant. Mike Webster is one of the longtime IBD employees. Then he was on his own, back to IBD. He was a money manager, portfolio manager, and it sounds like he was kind of O'Neill's best person or best friend, best buddy there when he talks about how he worked with him. And Charles Harris from IBD was there, um, IBD Live, and also portfolio manager. And just Amy Smith, who I asked her if they renamed her Amy Surge because they changed Market Smith to Market Surge, was there. It was such a great time. And um, so much of what I do, I learned starting with CanSlim. So I highly recommend that for next year. It's like less than 200 bucks. Of course, if you live in South Florida like I do, it I had to you have to fly there. And but being live in a meeting, there's so much more. There's what you do at breakouts. You're meeting new friends. You're hanging out over meals. You can't beat it. I mean, I went to dinner with a group. One person is a sort of a systems trader and automates things, and um, Mike Scott was there, and Mike is just no relationship. I wish he was, that I get his tools for. He's got these indicators I die to have, but he was there, and it was just a great conversation um, of a lot of old friends. It was good. So let's talk about what we're going to do here. Let's go through the markets. Of course, I'll have some introductory slides. I'll do my sales pitch for the meeting. I will review my performance. I am so tempted to just shut it down and forget about trading the rest of the year just so I could put this one in the books, but I won't because I want to get even better. Um, but it's been a year to remember, and I hope you guys have been making money as well. So let's make sure I get my cursor in the right place. So always, this is for educational purposes only. Anything I talk about should be considered in the spirit of education, not investment advice. The intent of the video is to show you how I put all this together for top-down analysis and trading. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. And trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. Speaking of Webster, I just thought about. I just watched the thing he did today on the 3 weeks tight. He does something on YouTube every Saturday. He used to do these long things where he'd go off on tangents, and he's a deadhead. He's such a cool guy. And now he's doing these more succinct programs. Probably gonna do the long ones again as well. He interviews smart people. Um, he did a Joe Fahey interview not long ago. So every Saturday on YouTube, they're free. Just go to YouTube and look up Mike Webster. The other thing is IBD Live does a market summary, and I think it's free to everybody. It's on YouTube. He's on it a couple days a week. He was on it Friday, and he had some good thoughts about the market. And so remember about the risk. Trading stocks options could be considered risky, and make sure you consult with your financial advisors. I think everybody here knows about my Google group. It's called Top Down Trader. I am going to keep it and ask people to continue to sign up there because until I get scale on the website, it's going to be my mailing list. And I think you know I don't spam you. Um, Surely don't call you for any great investment deals I have to sell you. Um, Florida, I would love to have 5 more people come to this meeting. Um, it's October 26th and 27th. It's intentionally back to back with John Person. His meeting is the 24th and 25th. We each get a live day in the market. He gets his on Friday. I get mine on Monday. And then we have one day on the weekend. He does his Friday and then Saturday. I do mine Sunday and Monday. So you can take the non-market day to actually have your attention and do some more teaching. So hope to get you there. It's again, mine's 26th and 27th of October, Marriott Palm Beach Gardens. 2 packed days of education and software instruction. Back to back with John's meeting. His is a separate fee. We're not at the same hotels because I blew it. I thought he was going to be at the Hilton Garden Inn, and then I decided to go not far away from it, and I think he's doing his now at his golf club, and I must have looked at an old invite, but it's in the same general area. It's 12.50 for mine, and I'll feed you breakfast, lunch, and dinner on Sunday. I'll have coffee and soft drinks in the room all day during the meeting and snacks. Um, when I used to do these meetings regularly in Florida, we used to joke about how much weight people join. So maybe I'll have a syringe of Manjaro for everybody too. Just kidding. And weather permitting, I've got my captain, I got a stew, and I've got some food, and we'll do a dinner cruise on Sunday night, and that will be fun. Hey, Bazzi. And I think it'll be a lot of fun to go out on the boat, stocks and docks. And the reason why I limited the meeting to 12 is because I've done more than 12 people on the boat and it gets too crowded. Hotels 155 a night. There was someone did comment on my YouTube video today that you need to call up to get the rate and avoid penalties. Um, I know 1250 seems like a lot of money. If you look at what other people charge for their meetings, it's not. And not everybody is going to do the meeting to break even, which is what I do. And you'll see what the food you get and everything else. And I will give a $400 rebate. If you already own my tools, Thank you. But you can use the $400 to pay for part of the meeting next year. If you don't own my tools, once you pay, you trigger the rebate and you can buy the tools before the meeting. Um, and Again, that's my meeting. And everybody on this list, I think at least 95% of you have been exposed to me before. I'm a top-down trader. Um, I live for years like this year. I mean it. I mean, I've had good years before. If I keep where I'm doing this will be my best year of my life from a trading perspective, if you look at percentage return. But I live for bottoms because bottoms are the best time to make money. I live for tops. I haven't figured out how to make as much money on tops as I do bottoms, but you can't get bottoms without tops. So swing to position trader, daily, weekly charts, indicators and scans help me find setups. I trade equities and equity options, and my A trade is to find a stock in a longer term uptrend that pulls back to support, breaks out on momentum off that support, and then I have rules-based position sizing and stop management, and I love seasonality. Something else I love is relative strength, and that's something I'm going to be expanding upon in the live meeting that I haven't done before. In yellow are the opposite trades, and they work when you're in a downtrend. But we're in an uptrend now. And the other thing is, and this, I don't think people realize this about me. I don't take that many trades. In fact, I have way too many positions right now, and I'll talk about what I did about that this week when I got a little nervous on Friday. Um, I have too many positions because I get them and I don't do anything with them except roll them up or out. And again, we'll define what that means as well. And I sell them when they stop working. But I'll go weeks when I take no trades. I'll go weeks when I take 3 to 5 trades. I go days without touching anything except maybe rolling up and out an existing option position. So I don't think you have to be a hyperkinetic, trade 1,000 trades a month to make money. And again, I want to do this in 30 minutes a night. If you watch my videos, I'll be very honest with you. I don't prepare for anything. If I can't teach you how to do it by what I do anyways, then it's a waste of my time and yours. I'm not making this stuff up. I'm going to do the, I will turn on my computer. I will go into Market MRI Pro. About the only thing that's happened before I do my top-down analysis and find stocks is I've run my TradeStation scans and more get a sense of the market than anything else. Um, and then how I trade hasn't traded in 30 years. I'm going to go back to an oldie but goodie and talk about what I call campaign trading when I take the same underlying trade options and I stick in the trade for months, but I continually roll my options. And I want to show you what that means. I didn't have time to make one of a current stocks because certainly it would apply to things like IREN, Hood this year, probably be the best examples. Um, and sometimes I'll buy stock. I mean, I actually bought Baidu. I don't know why I bought it instead of buying options, but it turned out to be a good thing to do. Does my style of trading work? Well, I mean, the good news is I got a bunch of you here this morning. The bad news is when I do a wealth charts, um, they're trading Wealth 365, which interestingly I don't get invited to do anymore, which is fine. Um, And I think that's not just because I have my software. I don't constantly sell, and I'm not a prop trader, and I don't have any issue with Rob. So it is what it is. I don't really not a problem. Um, I think that when I do those and you see thousands of people in a webinar, and when I do my own, I got 17. I'm excited. We had 21 people sign up. I'll get views afterwards. So I guess maybe I have to convince people, but I'll comment on my performance on webinars. I've never before this year shared an account statement. I've always shown snapshots of great trades and I'll pull up and I'll copy that trade from my brokerage statement just to document it. Um, but what I tell people, and I think, I mean, some of you when you who came in through Praveen asked if I make money, and it's like, just go look at my webinars. I'm pretty good, I think, when it comes to direction of the market. And I think my style of picking stocks, which is very much what I learned from Ian Woodward, works. And but they're archived on YouTube going back 20 years. And I will also tell you that even though I know some of you, many of you, or all of you personally, you shouldn't trust what anybody tells you about their performance. So take what I show you with a grain of salt. If you don't have the body of work that you can see that built up to the results, then you ought to be careful. I trade one account right now. All right. I used to manage more of my personal net worth, and I used to play with accounts with 7 or 8 figures. Look, I'm a lucky guy. I gave up a big income as a doctor to take a small income as an entrepreneur, and then I sold companies. So a lot of my money and the money we've given away came from selling companies. My current business is the biggest I've had. It's close to an exit, so I need to concentrate on that business. I had major health issues in 2024. I'm doing fantastic, so we can forget about those. But I did have to focus on my health, not my portfolios. Although I was able to get my wife to feel bad for me and let me get a bigger boat or a nicer boat. I mention my grandkids all the time because that's what life's about. I got a 4-year-old that lives 5 minutes away. So we built her a swing set, kind of fun to do in my backyard for my grandkids. She doesn't have one at home. Hopefully my grandson will come down soon and see it. So I simplified my life this year and I wanted to see if I could trade a smaller account. There are benefits to a smaller account. There are benefits to a larger account. So I put almost 150,000, was within dollars of 150K in cash and stocks. I left that in my Thinkorswim account. All my other money I moved to the asset managers, except for I have a small TradeStation account that still has Summit in it and a long-term ET, which just generates income. And that's it. I don't have any other accounts that I touch individually this year. And I did sell half my Summit, if anybody's holding Summit, um, after the meeting of the World Lung. I think it's more of a crapshoot than I thought it was. And I will say that if you're holding Summit, I still have a position, and they have a keynote address at the European Society of Medical Oncology meeting, which I'll be at in Berlin in a couple of weeks. So it may go. People said things in the audience at the World Lung meeting that I played back on a video, and I said, yeah, that makes sense. I don't want to pay all my money on it. All right, so what else do I got for you? And so, because of my performance in 2025, as people may have seen, I doubled my account by July, and I decided to give 500,000 more to trade. So that would mean I'd have to get to 1.3 million if I doubled it all, but that's not a double because 500,000, I only have to get 250 in 6 months. If I grew that 250 plus the original 150 that was 300, I had to get my account to 400, about $1 million. I've already doubled it again. Why top down? And this is where I want. This is so important. This slide. This is an ancient slide. This is an Ian Woodward snapshot of a slide. And what it says is in a strong market, good stock pickers, good technology, whatever it is that helps you make your picks, can double their accounts in 20 days. 20 days is a month. All right. In a weak market, the same people who could double their stock in a month, double a stock's price in a month, get horrible. So there's messages there. It's not just who you are and how good you are at stock picking. You can't use the same approach in a bear market as a bull market. Now, you might ask, well, how do I know on a given day whether it's a strong market, mixed strong, mixed weak, or weak market? You don't know. And what this data was generated from was a monthly meeting of smart people in the Palos Verdes Estates Library. I got to attend occasionally because I was in Atlanta at the time. It was still a hike and not a cheap plane flight. Um, so that's the first message. So we didn't know what kind of market it was when you were there. And I'll tell you right now, we are in a mixed market. I don't know if we stay mixed strong or if we're turning, and we'll talk about that as we do the market review. But retrospectively, you can go back and say, God, that was a great market. Did we know that April 15th that we were in the beginning of a great market? No, but we know now. So they would retrospectively define the market. They would look at the stock picks and they look at 1 and 2 month performance. The other message is take profits because if you come out of the gate and double very quickly, you're likely to revert to the mean. And that the one thing that many people have not experienced, especially those that came in after March of 20, if you've not experienced a bear markets are bad. They're bad in many ways. And one of the bad things is you don't revert to the mean. And that weak market, if that occurs during during a recession, a bear market in a recession, you just keep getting worse. So if your first loss is your best loss in a recession. So when we get our recession next year, I'm going to be very light in the market or I'll be short. So here is where I've done through the year. Let's just talk about what this slide is. If you're a member of, if you have Thinkorswim, then you have Schwab, and they have a place here. How is this calculated? So I kind of like how they're doing this because they're looking at when the money came in and what the return is. They're at an annualized basis based upon when you put your money in and your performance. But what I really like, so as you could see, I'm now up 218% in my account as a whole um, since January 1st. If you look at my equity curve, I bet it looks a lot like yours did, in that January and February were great. They were great. And then sometime in late February, the market started selling off, and that was a pretty significant sell off. And it hit my portfolio. Um, but something happened in April. We hit a bottom, and my equity curve is a straight line since we hit that bottom. And you could see during that same period of time, it's not like the rest of the market's up 100%. This is a happy picture for me. Now, you can also see that since the beginning of the year, I've doubled from the money I had. The 150 I started with, the 500 I put in, 503. I've already up 677. So if you take out the influence of time, I doubled. I put this video out on April 7th. Now I'm going to always hedge myself when I'm doing something publicly. So I said, who knows if it's the bottom, but I said a bottom is in. You make your big money off of bottoms. I mean, you don't even forget the dates. April 9th, 2009, somewhere around March 20th of 2020. There's a time in 2002, 2003. These are watershed days in a trader's life. And the earlier you pick that we bottomed, then you can get something that looks like this, which off the bottom, again, it's going to inflate the numbers because we're talking about um, month 4 to month 10. So it's going to double the performance when you annualize it, 441% off the bottom. Does top-down trading work? You tell me. I'm pretty excited about this year. How did I get here? I use a little bit of margin, but I use options, 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 options. I have option trades that are low cost stock alternatives, and I find spreads with limited downside risk. If you look at my win loss ratio, it's going to be bad, has to be bad, because if I'm buying one call selling two out of the money calls to pay for the long call, and then buying a call that's way out of the money, I'm going to lose money on the perfect trade on at least the long call that's out of the money. And I may or may not lose money on the two short calls. So I don't even care about my performance on 50-50. I care about my account. I avoid big losses. All right. I take spreads where I limit my downside risk and I have unlimited upside whenever I can, or enough upside that I don't think we're going to take it out. I don't chase shiny objects that are extended. All right. I wait for them to pull back. I got out of OKLO way too early. All right. I made money in OKLO. I made money in LEU, both of which I did, I found on my videos. Because like I was saying before my mind gets distracted, I don't prepare for those videos. I do my analysis while I do the video. That's all I do. Of course, when I get off, I figure out which option to do. But I could have made a lot more money had I held them, but they became shiny objects and I wasn't in them anymore, so I didn't go back. And I'll scale up and down size and my cash reserve based upon market conditions using my timing model, which I tell you every night when I do my videos. I follow a trading plan. Pullback's an uptrend. I love my two dots and HCDs from John Person. I try and position size similar to what I would do with stocks and not go crazy. I don't do revenge trading. I roll my winners up and out and no FOMO buys during work time. I will not buy stocks during work that I've not already put a trading plan on overnight because I've done it in the past and typically I buy the high of the stock. And I've enjoyed the smaller account. And I know for people, not everybody, 150,000 is a smaller account. But I sleep better at night. I don't worry about the futures and I have less anxiety at earnings season. This is what I mean by up and out. And there's one error in one of the charts. Yeah, I shorted puts, not calls there. Um, Basically, this is a 10-year-old trade, but it's a trade that defines how I trade. And by defining how I trade, I entered a position in Ambarilla in March of 2015 by buying a 60 call and I bought a 65 call and I sold a 60 put. Typically that means the stock was probably between 60 and 65 at the time. The 65 call cost me $24,000 for 50 calls or 5,000 shares. And I got back 16,000 on the short puts. So net net, my investment on this trade was 36,975. If you look at what happened over the next 3 to 4 months, notice that kept rolling the call. The 65 call I renewed here as the stock went up. I renewed it in June. In May, I rolled it up to an 85. Each time I'm pushing out my expiration date. And then I rolled it to a 110. Okay. And then ultimately, I closed the position. And I didn't hold the 110 very long because the stock reversed. I turned that 36,000 purchase into 181,877 in 4 months. But that's not the most important part of the story. All right. After this April trade, I had none of my original money in the trade. So I had essentially a risk-free trade where I was playing the house's money on the way up. Now, as I've grown older and a little bit more cautious, I probably would have bought another put underneath the 60 put I shorted just to reduce my risk. So I was wrong on this was the value at termination, 36.9. I paid 8,000. Let me get that straight. I paid 8,000. The value at termination was 37,000. The next trade I had to put 3,000 out of my pocket because the trade was 40,000. And then sold that one, and you can see the gains and losses built up here. But after this trade, everything else was playing with the house's money. Um, that's how I want to take my trades. And if Thinkorswim opened up today, because it's not been opening for me, it's still not opening, I would show you how I've done the exact same thing this year on a number of things. Hood being probably the best. IREN has been another. SC I've been doing for a year, rolling it up and out. GLD is another one. And but Hood is by far. I've never owned a share of Hood, and I got into it after the April 7th day, and it's up my P&L year to date, not in my current position because I roll it up and out. It's over $130,000. So that's how I trade. And I actually have more time for what matters. She thinks football is Michigan. I yell go and she yells blue. I go, what are we going to watch today? And she says Michigan, which is good, except she thinks I'm saying football. Um, this was the day before my surgery, and I ran in at Peterborough, the private airport for New York. It's in New Jersey, of course. And I ran into the new Michigan football coach the day before my surgery, so I knew I was going to be okay. This is my little boat that will go on for dinner, and that's my lovely wife who'll be hosting. Um, New features got released today in the program. Um, IBD type relative strength, it's sort of been hiding there, but I think Praveen turned it off for good reason. But we'll show you how to put on the chart, how to use it for scanning, and how I rank stocks with it. I'm trying to, one of the things I talk about at the live meetings is my A trade. And my A trade are examples of my best trades, like that Amberilla, but not the beat my chest and show you why I made a lot of money on it. But why did I take the trade in the first place? Well, I want to turn those into automated scans. So we launched two of them today, the A and the A plus. They are works in progress, but they capture the things that I liked and have led to my long-term winners. On the indicator side, we've got relative strength. Power trend is done. I just not sure if we're doing it wrong or if a website that I compare it to is doing it wrong, and it might be the website. So I'm reviewing the charting output and to see before it gets released and I talk about it. More to come. Our first add-on, John Persons, is done. I just got to get to John's house and sit down with him and figure out the business model, what he wants to charge. Is it a one-time? Is it a lifetime? Or does he get a freestanding unit of the program and nothing to do with what I do? It'll probably be some combination of all the above. Unlike me, John has a lot of hedge funds and high high value asset managers that he works with. So it does make sense for him to have his own product, and then I want it for an add-on for folks to be able to purchase. It's up to him. It's not up to me. I hope to have it before the meeting, have the knowledge. And let's go into the program. Now, I do have, and I will include it, I will download at least the top down. I've got, the usual presentation that shows you how I do things, and it's got examples on the slides, but we don't really need to go through that today. Most of you have seen it before, and if not, I can send you a video that did that. I want to go spend the rest of the hour and a half in the charts. I am also available to answer questions. Now, for those that have been with us from the beginning, um, we keep working on bugs when they pop out. I think the bugs are a lot less. I'm very happy with how the lists are coming. In fact, I did my review last night, and now that the lists are functioning the way I want them to function, um, I did my whole review using this product instead of any other products. I've used other products in the past because of the list function. What you, what do I mean by that? The weekend review is a list that I put together of stocks that made it to somebody's watch list. Similar to the combo list I've used to give out for wealth charts. But this one was about like my favorite 1,000. It was a little bit higher. And I'll go down and I'll look at one at a time as I go through that list. And the beauty is after you get your first stock, you can actually flip through just like it's the data's on your drive. So I'm really happy with that performance. But if I wanted this one, and I don't, by the way, if I right clicked on it, I can add it to any list. So now what I've done is I've created a series of lists that meet my needs. And all I had to do for that is click in this thing up here. And then if I wanted to add, rockets, and I would type it in, hit enter, and then I've got too many lists, so it's already not too many, but I'd have to drop it down, and there's the rockets list. And now if I was looking at any list, I could right click and just add it to rockets, and now you see it's in rockets. So that is a big improvement. The other things that I thought were really important on the improvements was this thing here. It allows me to copy from a clipboard or paste from a clipboard rather. So if you have a list elsewhere, this one allows me to copy to the clipboard and take it elsewhere. So the fact that I can right click on a stock and move it wherever it needs to go, I think was a great improvement. Um, for those who haven't seen the program before, I am going to go and I'm going to go and show you how I use the program both intraday and end of day, and how I use it to find stocks that drive my outsized returns. And again, that is not a typical return for me or for anybody else, but that is the kind of returns you get off the bottom if you play it. And if you look at the US trading championships, and no, I don't waste my time with that stuff. I'm going to trade my real money, and I don't want to hamper my trades because I'm worrying about what it looks to somebody whose I have to report my performance on a daily basis or weekly basis. But if you look at the US trading championships, you will see that the greatest performances were in 2009, 2020, and I bet we'll see if we get the great ones this year as well. Oh boy, I forgot to record it to that. All right, yes, you can record it to your computer. I'm sorry, I just saw that. Let me turn on I am recording this with Snagit. That's how I typically record it. But I can also record it. And boy, I'm glad I saw that because we're not too far in. Let me bump, 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 bump. See, Joel isn't here to remind me to record it. It's all his fault. All right, I'll have a backup in the cloud, but it's recording on Snagit, so we should be okay. But yes, I let somebody record it themselves, but I will be posting the video tonight. So I'll always go to this. In fact, I don't have charts up on my office, but you might see this on a computer because it just tells me what's going on in the markets. And I'll always highlight or rank it on what's moving 1 day close. I do look at this side a lot, which is the closing range, and I try pointing it out when it's important. Um, on Thursday, the numbers, I think was Thursday, weren't great this whole week have been little moves. Um, but you were in the 80s and 90s on closing range. I thought that was very bullish, and I talked about that. If you watched my videos the last week, I reminded people you sell Yom Kippur. Yom Kippur was a lousy day. I mean, it was one of those days I was wondering how much it was going to hit my performance. And Yom Kippur, you buy Yom Kippur. Yom Kippur was a great day. And typically, I think the reason for that is I'm Jewish, so this is not anything anti-Semitic that I say. There are a lot of my people, a lot of Jews on Wall Street, and a lot of them are very Orthodox, and they stop working on the day before Rosh Hashanah, because the Jewish holidays start at sundown, and they don't come back until the day after Yom Kippur. They represent a lot of volume on Wall Street. So when they're gone, you get lower volume volatility, and typically the markets sell off in the beginning, and when they come back, the markets go up. So that's the sell Rosh Hashanah buy Yom Kippur story. So I see Bitcoin, and I talked about this in my video over last night. Bitcoin was up 12% last week. So Bitcoin, which had a bit of a correction, seems to be righted. And you could see Russell outperformed, Diamonds outperformed, Spider was flat, Qs were negative. Nothing was above 1%. So it really wasn't a big day in the market from that perspective. I like looking at 5-day change because some days one day doesn't tell you the whole story. And you could see it's Bitcoin, then Russell, volatility was up a little bit on the week, then Qs, Diamonds, Spiders. It was a very quiet week, nothing up 2%, and then the dollar was down a bit. So I'll look up here. I look at the new highs minus new lows on the NYSE and the NASDAQ just to get a sense of where they're going. And as I like to say, bull markets and market new highs are based upon stock new highs. You don't build a bull market on new lows. So look at how few the new lows are on the NYSE and on the NASDAQ. That's pretty bullish in my book. This here panel here, my buddy Sagar, he takes some of my stuff and makes it better, and I see some of the things he does, and I try and make it better too. So he's got these dials that look at the number of sectors up during the day, industry groups, and stocks, and he does it in the S&P 1500. I thought that was fantastic, so I wanted to do it in the NASDAQ and NYSE as well. And I'm constantly looking at this one. What percentage of stocks are up? Because if the percentage of stocks are falling and the markets are positive, the market's going to go down. So it's giving me a sense. Now, do I have time to watch this all day long? I'm watching it a little bit, and the truth is sometimes I'll sneak off to the little boy's room with my phone, and I make sure the internet works there, because if I have to do some adjustments during the day, I won't do them at my desk, because I got employees who don't need to see their boss day trading, or one of their bosses day trading, and I don't day trade. And then over here, the S&P 500 sectors, what's their 1-day change? Um, so just tell you the difference between the funnel and the arrow. The arrow ranks it, so it tells you from top to bottom. But let's say I wanted to filter out, and I only wanted to look at things above or below a certain amount. I could do that here. Um, we'll show you that where I actually use it. So you could see it was a strong day with healthcare and utilities and financials leading. And we should know right away that that's not a risk on day, because typically healthcare is a defensive play, utilities are defensive. And when you see the laggards were technology and discretionary communication, although again, to be fair, lagging, but really not that much. And when you look at what was leading, clearly the miners, copper, gold, and silver are still strong. Clean tech, robots, genomics, biotech, XOP, oil producers, biotech, renewable energies, metals, and mining. I found this thing here to be really helpful to get me thinking about the right places to be invested in. I've got First Solar, and it's had a big move. Why I'm in First Solar? Because I got tired of seeing solar and clean tech showing up on the left all the time, and I wasn't in it. And I looked at the solar plays. I bought First Solar and I bought JKS. JKS, I'm up a teeny bit. First Solar, it's been a nice trade. Could have bought TAN for all that matters. So I start here so I know what's going on. This thing here is the update. It will update before you can count to 5. 1, 2, 3, 4, 5 during the day. It can't update on Saturday. What's it going to update? Well, it updated. You saw how fast it changed, but nothing changed except I might have to reset my resets. Um, so that's how fast it updates. So I don't stream it. so it changes real time on your computer because I don't trade that way. But what I do is allow you to update it as often as you want to update it, and it will update for you while you're sitting in front of your computer in a way that's usable. So we get real-time data feeds. We let you update as much as you want. So that's where I always start. The next thing I look at is my timing model. My timing model I wanted something that was objective. I wanted something that incorporated what I learned from Stan Weinstein, and this is the WMA, 30 period WMA. And I wanted something that came from Ian Woodward. Well, it actually came from me and Gallardi and Minkowski, some of the guys that hung out with Ian, and he gave us an assignment to build a trending indicator that we could use as a buy sell tool for I don't know, that turned on, for finding trending stocks and markets, and that's here called the bongo. So I have used as my dominant direction model for years the weekly bongo. Um, One of the guys that put it together, Dave Steckler, used to tell me that he used that for managing money in some of his model ETF funds that he did. So as long as price is above the WMA and the bongo's blue, it's in a buy. Now, you'll have periods of time where your bongo's red and price is still above. Both of them have to change, price below and the bongo, to get the signal change. So I make it easy. Here's the buy sell signal. According to my slower part of the model, you would have been in the market since the May 12th. Okay. That wasn't the day of the bottom. Obviously, the bottom is back here. It takes more. Nobody's going to flip on the day of the bottom. So this is my dominant timing model. I will look at the daily. Sometimes things are much faster for whatever reason. Maybe less people are using it right now. I use the daily to fine tune. And if we go back a little bit to that April time frame, the daily would have told me to be long on the 24th. You would have captured most of the run if you were along the 24th. Just look at where that WMA was. So I have no problem with that. Now, did I require the daily to go long? No, I did not. In fact, now I'm even getting to the point where I could do it. Let me get this to work right. Hourly. And I'm playing with the timing model, and let me just see if I have to daily minutes. Yeah, well, that's hourly. So now I can look at the model from an hourly perspective. Am I doing anything with it? Yeah, I sold TQQ. I shorted TQQQ at lunchtime on Friday for market protection because I wanted to protect myself from getting hit with a bad Monday. And it just happened, the top of the market happened at 12 o'clock when I was eating lunch. Um, and I was working from home, so I was able to look at the markets. But I also bought puts on diamonds, SPX, the spiders, and the Russell. I just think we have a short-term pullback coming here. So I can now, because of the fact that we can look at hourly charts, heck, not that I really know what I would see or what to do with it, I could go to 15-minute charts and look at the timing model. No, thank you. All right. I'm not doing a model that flips, but I do like the fact that this model has been really good, especially the weekly. And oh, by the way, the monthly's been long forever too. So I think I have an objective timing model that helps me put the weight of my portfolio in the right direction, but I don't wait for the model to change. I look at other things that will drive me. Let's look at some of them. I talk a lot about the buckets, and the buckets take every stock in those indexes And we learned on the S&P 1500, which is a great model to learn from because it's got the 500 bigs, the 600 smalls, and the 400 mids. And Ian would look at the percent B on each stock in that index. And he created between the bottom of the Bollinger Band and the top of the Bollinger Band 10 deciles. And he wanted to see where were the stocks in those deciles. And what he learned and what he was that you'd really have 12 deciles. How can you have 12 deciles? Well, you have one if you're above the top of the Bollinger Bands, and you have one if you're below. Sager took this from me. I love it because I use Sager's tools too. I don't care. I took it from Ian. Um, I watch the ebb and flow of the buckets. Well, I'll tell you, during the morning, the NASDAQ buckets got above 15%. That told me we were getting short-term oversold, or overbought rather, and that we'd revert to the mean. So I'm using them when I'm cheating and working from home. But I really use them to find turns in the market. I would do nothing based upon the buckets here. But when the ones above get above 15 or 20, when the ones below get above 15, 20, that index and the constituents of that index are going to revert to the mean. So that's one of the tools that I'm using to perhaps influence an earlier getting out of the market or getting into the market my before my buckets, or before rather my timing model is going to show that. Now, somewhere I have what it looked like. I don't know if I can find it fast enough. All right. Let's see, did that come up the PowerPoint? Let's see if this has got it. All right, let me see if I can get this to pop up. Go back and find it. All right. I went too far. Figures, hold on. All right. Okay, I think I figured out how to do it. Okay. So now I'm going to go up. When I see this picture, I am getting excited. I'm also probably crying because I've lost money. And what this is from April 4th of 2025, or March 4th. So even before we got there to the ultimate low, I have 32% of the stocks in the NYSE are below their Bollinger Bands. I have 35% of the stocks in the S&P 1500 are below their Bollinger Bands. I've got 28% of the stocks in the NASDAQ below their Bollinger Bands, and I've got 36% of the stocks in the Russell. What do the Bollinger Bands are they supposed to capture? They are supposed to capture 90, 92% of the time, stocks are going to be inside their Bollinger Bands. If 30% of the market is above or below their Bollinger Bands, something is going on. And that tells you, think of either getting in when you see that picture or getting out when it's to the right, the same thing. The other thing that's interesting, and I didn't really pay attention to this before, is we got green shoots. When you see this picture here, that's telling you, again, that 28 or 29, I put my glasses back to read the number, it's so small, percent of the stocks are below the Bollinger Bands, 28, and then we popped up a little bit the stocks above. Green shoots. Stocks are breaking out. Now, if you look here, you'll see that gray, and then you see the color. The gray represents where we were yesterday. The color is where we were today. I can't tell you how powerful this is. You got to figure it out yourself. It is powerful. This tells me neutral. Next one, market breadth. So this is where we started with, and I'll spend a few minutes here because there are a lot of programs on the market, and a lot of programs will do the same thing. There's only two programs that will do out of the box what I'm showing you. One's mine and the other's HGSI. And we've got things that HGSI has, and of course, HGSI has things that I don't have. This was my initial attempt at building a market breadth dashboard. I got a better one, and I've asked Praveen to push it to everybody. So if you don't have it yet, you will be getting it. This one is still my go-to, and I wait to do my videos until I know this is updated. And how do I know it's updated? Because it doesn't update right away. The first update when I have a volume bar. And the reason why it doesn't update right away is they're still trading and the numbers are being finalized in the first 15 minutes after the market closes, and some of the data that required for this slot, this layout comes later. Price and volume you have constantly. So I looked at this yesterday and I said, well, the NYSE, geez, who knew? It set an all-time closing high. This is the NYSE. This is the NASDAQ. Didn't get to the all-time high, but it was an all-time closing high. We look at the NASDAQ, and it's not an all-time high or closing high, but it's close. Very bullish looking, both of them. Here was that little pullback that we thought was coming. I thought we'd get more. I mean, a pullback to the 50 happens all the time, but we didn't. All right. So I have the 50 and the 200 on it. I look at volume. Um, Had a funny question yesterday from Praveen, and Praveen asked me take a screenshot of this. This is what I typically use for my volume is what's Market Smith saying about volume. And just because I use it all the time, so I kind of trust it. And so it was, I always want to refresh it to make sure I'm looking at the right day, 9%. So both the NYSE and the NASDAQ were a little higher than normal on volume, but little is the key word. So that's what I kind of use as my Bible. Maybe he's going to put something into the program so I don't have to look. Down here, I look at stocks above, percentage of stocks above the 20 in green, 50 in white, and 200 in red. When markets extended to the downside, you'll see the shorter one really going to the bottom. When stocks are to the upside, you'll see it going to the top. Um, if you scooch it up, you'll see that this really wasn't much of a low one, that you could see that in really bad markets, even stocks above the 50. So I use this just to get a sense of breadth. If it's pointing up and moving up, that's improving breadth. If it's trading down like it did in here while the market's going up, that's a breadth divergence. And then I look at new high, new lows. Again, bull markets are built upon new highs being greater, and you could see, boy, we've had hardly any days with a lot of new lows. That's bullish. Look at a bad market. You hardly have any days with new highs. Very bullish looking. So much information in this slide. It's not the sexy stuff. All right. The AD lines and then the up down volume lines. But the real star here that allows me to make these market calls is this underneath. So let me just review what the signals are. And let's go back to here. Okay. These are Hindenburg omens. When I see these, I get nervous. I get nervous that the market has topped and it's going to roll over. This is the NYSE, which is the classic. I am probably the only person in the world that talks about them on the NASDAQ. I believe they work on the NASDAQ and that they're independent. And I believe that because of the makeup of the NYSE and the makeup of the NASDAQ. If you see Hindenburg omens, here's what your mind has to tell you. Most often, little pullback that doesn't matter. However, there has never been a major bear market or pullback that did not occur with a Hindenburg omen preceding it. And 1 out of 4 Hindenburg omens signify a substantial pullback. So once you see the Hindenburg, you just got to be aware. And here's a pretty good pullback here. If I go to 2007, you're going to see it painting across the bottom of the chart. So here is that, the highs in February. So remember I saw that March time frame when I had the buckets? I bet it was right in here. But so we had the Hindenburg Omen. These kind of green and white are called Eurekas. When you see them at a bottom, think of the William O'Neill follow through day. It's calculated 100% different, but it's bullish exuberance after a sell-off, and Ian developed it to come up with a mathematical formula that we could put into HGSI so that we could identify potential reversal areas. This red one is a phoenix. That's not a happy one. That's the opposite of a follow-through day. It is an aggressive move to the downside. Now, I don't really have a good way of advancing one day at a time, and my mouse is very sensitive, so I'm going to try and drag. Here was a bounce at the 50 on the NYSE, and I'm sticking with the NYSE, but notice how different the NASDAQ looks. The NASDAQ broke down hard in this correction, all right? And you tell me that these Hindenburgs are meaningless on the NASDAQ. I don't think so. We're concentrating on the NYSE and looking at my signals. So a bounce day. Now I'd go back and I'd look at my timing model and get a sense of what's going on. That would get me excited. I love this bottoming tail. I love that it traded to the 200. Next day, kind of a nothing day. A long-legged doji, long legs, doesn't tell me a whole lot. I should be long here, shouldn't I? So now I'm thinking I'm going to go back, and if I'm in a sell signal and I'm seeing this move here, again, I'm ignoring the right-hand side. And I wouldn't ignore it if I'm trading. I might pay attention to that. Give me more data. One more day. Uh-oh. This is a big reversal. This is my Hindenburg is working. And when you see that, you really want to be very careful. Now, you expect a reversal the next day. You should expect a reversal the next day. Why? Because when you get that big of a sell-off, you're going to get a bounce, but you didn't. So you are out of you should be out of the market here. I didn't get out fast enough, which is why when I showed you my equity curve, it pulled back and I was negative for in February and March when we started pulling back. Eventually, even I got smart and I got out. Oh, what is this? Now we're getting excited. And I want to introduce you to my new friends. You see these little green pluses? Those are called a bingo. And when you see a bingo, think of the term, they're selling everything, including the baby, out with the bathwater. That typically is climactic selling on big volume, and it says we're coming to an end of this pullback, but didn't tell me when. This happened to be April 7th. So I was early, and that's the day I went out obnoxiously as I am, and I can be obnoxious. And I said the bottom is in, and I put that out there for all to see. Now, I figured if I was wrong, no one would remember. And if I was right, then for the rest of my life, I could talk about my bottom, just like Joe Kernan used to talk about the April 9th bottom, except the difference was people actually knew who he was. So this is a hammer candle. It's got a little bit of a topping tail too, but that's a massive reversal candle. That's why I put the signal out. And then only available here in another day, you're going to see something. Here is the next day, which is the 8th. Now, you probably, if you listen to me, you know that I don't buy just because something looks good at night. I want it to trade above that candle. So I probably started nibbling here. I can't remember. Boom. This is the day that most people would have called it a reversal. I'm fine with that. You would have made plenty of money. But I'd like you to meet my new friend, the defibrillator. That little green triangle is Praveen's invention that he came to me when we were coding the Hindenburg. He said, I want to find the Hindenburg opposite. And he came to me, and we hadn't had a market bottom in quite some time like this. So we hadn't seen this for years. And I said, okay, damn, it fired on April 9th, along with a Eureka. So somewhere in here, we're going to have a O'Neillian follow through day. And that's when the rest of the people started going long. I would say that that was a pretty good call. So, do I really care what my timing model is saying here? No, I am not a lemming. I can think for myself. The timing model got me out of the market, all right? But no timing model is going to call the bottom by itself. So I have to put the the evidence, the weight of the evidence to support what I think is going on. And I thought there was a reversal. I put money to work. And I told you guys on the 8th, I bought Palantir. I bought Hood. I bought Pags, which didn't do so well, didn't do bad. In reality, I bought about 15 other things as well. And I went in hard, maybe too hard, but I wanted to prove some points. And now there are going to be people that waited till took out the 50. Okay, you're at 19,136. You still captured a lot of the following move. There are some people that will wait to this retest of the 200. Another great time. For me, buy more, add positions. And this market went crazy. Now, along the way, you don't see Eurekas. You don't see any more bingos, but you start to see the red X's. Those are bangos. And a bango is the bullish equivalent of buying everything. Or it's the baby out with the bathwaters, but we're buying all the babies back. We're buying everything indiscriminately. They can be associated with the market top, but in a bull market, they're just firing crazy. And then a pullback to the 50. I love pullbacks to the 50. Why do you think Ian called it free parking? It's a great place to enter. All right. And then here we are today. So I showed you the dance of the Hindenburgs telling me to be careful. The Phoenix is telling me the market is starting to sell off hard. The bingos firing, saying, baby's out with the bathwater. So I'm flashing in my mind, be aware the market's getting ready to bottom. Then we see a cascade. We see Eureka, exuberance day. We see an O'Neill follow through days. Then we see the defibrillator. It's all clear. Go all in. And the rest was history. How do you get stupid returns in the market? You buy at reversals and you sell at tops. You don't make money in sideways markets. You make money in trending markets. And no better to be early. Now, did I go all in on April 8th? No, I went in a lot, but I added at these points of breaking the 50, of retesting the 200, because my conviction was really good when I got to this state. And yes, I lost a little bit of money here, just like on Yom Kippur, I was sitting on Rosh Hashanah. You go to services, then you go someplace. You get invited by your friends to a big feast, so you're not supposed to be on your phone. It's a holiday, and I'm looking. It was a pretty awful day. It ended up less awful, but it was a pretty awful day. Um, and that I could do the same dance here. And the interesting thing is they did behave differently, but they both had sell-offs at about the same time. So where are we now? Topping tail, maybe. Would have said the same thing there. You expect a little pullback. Um, so I think we might get a little pullback here. The 17 is right underneath this candle. or the 21 exponential is about the same place. Here's the 50. I don't expect we drop below the 50. We're not in a recession. Um, I look over here and I see a reversal candle there. It was kind of an icky day, midday on on Friday. But then I got the encouragement of what I see down here, the moving up of the breadth. So I am not bearish. I am less bullish, which means I protected my portfolio. I didn't sell it off. This is the third time in the rally where I bought puts on the index leverage ETFs. The other two times, I may have lost 30,000 on those, but I made 100,000 by not selling my positions. I'm not trading those because I think I'm going to make money on them. I'm trading them so that if the market takes a dump on Monday, in October, Mondays are notorious. And after I saw the noontime sell off on Friday, I want to come out of that with only down a little because they're going to make up for the first 10 or 12% of a pullback I get. And I designed some cheap spreads that will give me enough to make up for that initial percent. And then I better do something else. But we're not going. I don't think we drop like that on Monday. The second breath tool, which will hopefully Praveen will listen to this video. He's on now. Will push to everybody. I've been using for a while and I love it. And I want you all to have it. I don't know what the best way to format it is. There's a lot of data. So I forgot to open this up and get all the things to populate before we started. I'm looking at questions. If you have questions, I don't think I've ever spent this much time on these indicators in the charts and calling out day by day. But if you have questions, put them in there. All right, so it's going to populate. I think this one goes back, well, I know it goes back a long time. Um, I have several of my favorite things are put in here. Right, this is an old trend line that could probably come out. Um, so I highlighted it, I hit the delete key. I think we can agree that each of the four, and this will come up in a second, that's the Russell. And again, I wanted to go back very far, so it takes a while. This one is the S&P 500. This is the NASDAQ Composite. This is the S&P 1500, and maybe we have an issue, but this is supposed to be the Russell 2000. Anybody that's watched me for some period of time know how much I like the 13-week new high, new low indicator. Where does it come from? It came from TC 2000. Why do I have TC 2000? Because I use it for one major thing. Actually, I used it for two things. I used to use it for the 10-year and 30-year yield because a lot of the platforms don't give you that data. But I'll tell you why I used it. Because this right here, I'm overlapping the 13-week new high, new low with the S&P 500. And when you get to certain levels, what date is this? April 7th. We bottomed. I'm not a genius. I just put together the weight of the evidence. This is my guarantee reversal signal. It may take a day or two, but it's guaranteed. Every time I touch this line, we're less than 0.14% of 13-week new highs versus new lows. The market reverses. Bingo, bango, bongo. I have a lot of confidence in my call on April 7th. I love this thing. Now, most of the time you get little pullbacks, but I want to know where the market is on the underlyings. So Praveen, yeah, I bet if I turn on and off, it'll work, but I'm not going to bother because this here is the 13-week new high, new low on S&P 5, the spiders, the Nasdaq Composite, S&P 1500, and the Russell. It lights up for you, 0.88. It's getting there, 0.95. We're at a place where I expect the market to pause or reverse. 0.84, 0.89, so the S&P 1500 getting closer, and you don't see anything here. We haven't had any really rough markets except for April 9th, and so we could go back. I could go back to that date. In fact, we could go. See if it works, Praveen. I haven't done this in a bit. This is one of the features that I love about MarketSmith is you could go to a specific date. And it's going to be in the middle. Look at what is going on the major indexes on the April 7th, and that'll light up on all the charts. Do you think that's helpful if you know what to do with it? How much stuff can one program have? We also have bottomed on our stocks above the moving averages. We bottomed on the RSIs, which was turning up. Now, there are things that I don't like right now, not in the program. I don't like the fact the Russell didn't come up, but look at the AD line on the NASDAQ, look at the NASDAQ new highs. All right, thank goodness it's turned up. The Russell's just as bad. This was selling off on the 13-week as we were making new highs. That's not good. So there's been a lot of divergences that I've been calling out. I hope you just learned something that if you're not doing it today, then you need to be having your 13-week new high, new low on something that you look at every day. And hopefully Praveen will push this out to everybody. So it's got the 13-week new high, new low, the stocks above the moving averages, the advanced decline lines, which I look at for divergences, and the RSI. And again, we set all-time highs on every index this week. We're not an all-time high in the RSI. We are not an all-time high in the RSI. We are not an all-time high in the RSI. Those are danger signs right there. So I believe we are getting set up for another pullback. Just my personal opinion. But as I've said multiple times, I don't expect this to be a big one unless we go into recession first. That is how I look at the market every night. Now, it just took me an hour. It takes me 10 minutes or less. I recommend highly that you start to think like Ian and I do. And I know many of you do because you went to those meetings. Oh my God. People keep calling me when I'm doing my Zooms. Look at the markets from a top-down perspective. Give yourself the edge of predicting what's going to happen before it happens by looking at divergences, by looking at that 13-week new high, new low, and front run what the lemmings are doing. You saw my return. I'm not a genius. I just follow my rules. And boy, this was bases loaded, bottom of the ninth, game 7 of the World Series, down by 3, and the guy lobbed the ball high in the strike zone in the center of the plate to that guy on Seattle, on Raleigh. You know where it's going. This was an easy call. All right. So that's how I look at the breadth, and that's how I look at the market, and that's how I make how much in the market I want to be call. A couple other things. Everything I'm showing you except for this is available to everybody. I would love it if we could come up with a new delivery system. I haven't asked Praveen this before. In TradeStation, for example, and to Bazi's point, I have a repository of workspaces, and I can pick which workspace I open. And then I can pick which ones I want on a specific desktop. We would call our workspaces layouts, and maybe at some point, we do have the ability to create your own layouts by punching that plus sign there. But maybe at some point, what we can do is allow you to delete the ones you don't want or to item. And Praveen, see my email, Scott. Oh, not to me. But when that happens, we'll be able to let you control what's in here. Now you can add, 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 add. You can't subtract. And oh, by the way, I made this. How did I make it? I went here, I called it whatever. I turned off the screener. I wanted 4 charts in that shape. I could have done 4 the long way, so I'm going to make sure that that dot gets colored. I want to link them on interval, and then I hit create layout, test, hit create layout, and hopefully we'll see come up on the top. In a second, there it is, test. All right, I can put in what I want, and then I can add the indicators. But there's no reason to make you work at it. We should send that to you. So I've asked Praveen to make that available to everybody. Of course, after I told you we have no issues with the program, which we really don't. It's been extremely stable. But I am doing a lot of manipulation. Let me bring it back up. And also, to be fair to Praveen, who is incredibly good at what he does, I had him force out this update today because I wanted to show you some things that we're going to go to on the stock review. We are going to stop at noon, no matter what, and I'll try and answer your questions as we go. There was a question earlier about the John Person. If you have John Person, and when he releases our update, we just started the program, right? Let's just count 1, 2, let's look, it's 11:23. We'll come back at 11:26 and we'll see what this looks like. But what Praveen did there is incredible. One thing that I noticed that caused me a little bit of grief was that it takes a few minutes for each of these lists to load. It doesn't mean they're not there. It takes a few minutes. All right, we just scanned in 1 minute or 1.5 minutes 3,872 John Person stocks with his radar screen in TradeStation. Praveen has built in all of his scans. You want to see Trilogy cells? You hit OK. Well, Praveen, I picked the one. Try that again. I know it works on the buys. We're still, oh, my bad. I didn't wait long. No, I did wait long enough. All right, let's look at the Trilogy buys. Of course, when I demo it, but it's not released yet, so I won't feel bad. It should, maybe the scanner. All right, Praveen, what am I doing wrong? I don't think I'm doing anything wrong. I've used these all before, so yeah. Out to check the trilogies. Here's the HCDs. How many HCDs it had? Daily HCDs. How about daily HCDs with a daily PPS buy and in a weekly HCD with a weekly PPS buy? Probably too many filters. All right, let's take out something. But basically, you can build your own filters, but it does the scanning for you in minutes. The indicators and the rest of the stuff, all the same as TradeStation. But my God, Praveen Scanner. All right, I didn't even look at index charts, so I'm telling you what I think is going on in the market. So let me just look at the index charts real quick and show you what I think, just so you're aware of. So as I said in my video, we're in a beautiful uptrend. I would like regression channels. Maybe we'll get that someday. But we're in a beautiful uptrend. Here's your seasonality for 10 years. It says we're out of the bad time. That's awesome. Here's your 17-day. We pulled down to it many times. Here's your 50. That's where I think bad is. We closed, highlight the bar, we closed at the 669, we'll call it 670. The 50's at 648. So that's 52 points. So that's 8%. All right. I think, if I could do the math, 7 or 8%. Um, that's kind of what I think the risk is here. I would be shocked if we broke down below there. Um, Frankly, I think we got support over here too. If you notice, just stick it on the charts. Hence why I have lots of lines on charts. I'm doing this all day long. We broke out here. We tested, we tested. So I got 1, 2, 3 areas of obvious support if we pull back. In case you don't know this, and in case you actually care about this, I don't. But if you want a 5-minute chart, you can have a 5-minute chart. It will still update like everything. You can have a 1-minute chart, a 5-hour chart. I'm just showing you that this number here will influence these. If I wanted a 5-hour chart, I have to hit the hours and then hit enter. Well, maybe, and now you have a 5-hour chart. So you could do whatever your heart desires for intraday, but I don't bother. And Praveen, notice what it did. I find that happens sometimes when I come out of that. I get a funny pattern there. It goes away when I play around, but something gets screwy in that. Um, so that's why I like doing these, because I make things do things funny and then Praveen can fix it. Yeah, there's something goes on weird, but it doesn't matter on what we're talking about here. So we got a big move up. I showed you where I think, oh, it's still looking at 5 days. Well, let's fix that. You can tell I never use it except to demo. All right. And I guess that fixed it when I went off the 5 days. All right. So I talked about where I thought we would have 3 areas of support, so I'm not too worried. But let me go back to just put on a 5-minute chart, and let's look at what I saw at 12 o'clock. That's 1 o'clock. We clearly topped here. This is the bar I think that got me interested, and I decided to take my shorts. I left my longs in place. I'm still very long, but I think we have a little pullback, so why not make a little bit of money to buffet the downside? As I said, I don't want to have a round trip, and I don't want to kill my performance. I'm very proud of the performance I have right now in the market. All right, so all of them look the same. Is that a reversal candle? Yeah, it is. It's a doji with a big upper tail. It suggests a couple days pullback. I hope to get out of my shorts, my puts within moments, and not to have to be in them for any length of time, because that would mean the market's not doing well. You have more of a topping tail on the diamonds. You had a topping tail on the Russell. The VIX is way off the bottom. There's a lot of reasons I think to have some short-term concern. And then on the commodities, I mean, the big thing you all know, gold and silver have been on major runs. Um, I I'm very happy that we did a webinar and on that or a video, and on that video I did this and said I'm buying gold tomorrow, and I did, and I took a big position, and gold has been great. I've taken profits along the way, but again, I never showed my performance before, because you just watch my videos and decide whether I make any good calls. Um, Oil breaking down, natural gas sucks. And then I'll look at these a lot. I'll look at the 10-year and I'll look at the 30. I just want to see the last couple bars. So let me just go here and say, give me 30 bars of data. And let me bring it back to where we are right now. To me, the 10-year and 30-year are great barometers, because if these things break out and go very high, the markets are coming down. Um, we were in a downtrend for this rally, and we have bullish engulfing patterns on, well, not quite, because you have the tails, but we have big, tall up bars on Friday on the 10 and 30 years. So that gives me a little hesitation as well. So again, I am not short the market. I put on insurance. I don't want to use my health insurance. I don't want to use my life insurance. My kids may want to use my life insurance. I certainly don't want to use my disability insurance. I have them there just in case. protect the first dip so I can get out of the market and not give up much of my gains. Now let's go to the favorite piece, and we're going to spend the last half hour or so here. So I've never spent a full hour on how I do the top down to get to this point. Now I skipped an important part, ratio charts. This is relative strength 101. Create a chart of the underlying instrument. Here is Bitcoin. The rest are the S&P sectors. A ratio chart with the S&P 500. If it's going up, it's outperforming the S&P 500. If it's going down, it's underperforming. How long does it take to see technology still doing very well? Healthcare is on fire. And then look around. You see little shoots here, utilities moving up, and maybe financials is waking up. And look at what Bitcoin has done. This is a 1 hour ratio chart. I use it every night to get a sense of what's working in the market from a high level. This I think is really cool. If I put a weekly ratio chart on and I go back, this is going all the way back to 2019. What are the only things that have outperformed the S&P 500 significantly since 2019? Bitcoin, communications, and tech. Why do they always say on CNBC that you want to have the rally led by technology? Because that's the only thing that long term, besides communications and Bitcoin, leads the market. This is an incredibly powerful tool. Now let's get to the JAS layout. So in this layout, I want to find in the next 10 minutes my favorite 3 stocks, and I want to do it from a top down and a bottoms up. Let's make sure all the filters are out. That's sometimes is something I forget to do. And if you ever expect to see 3,000 stocks and you see 1,000, it's because your filters are on, or because you came off of the JAS. So let's make sure we are in the right place, which is impulse. And there's my 3872. We have, for each of these stocks, I want to find this piece. For every stock in my list, we have packed it into a sector and industry group. Now, we is the wrong word, but we includes our data vendor. It's not perfect, and every once in a while we'll get some funny warrant or new issue that shows up without an industry group, and I think we'll see one in a few minutes. And then I tell Praveen and he fixes it, or the data vendor fixes it the next day. So when I go into a top down, this does not need to look like the S&P 500. Why? Because the 500 have the largest 500 capitalization stocks in the market, and I've got 3,800 all comers. This will look, and if you think about that, if you look at the SPY, that's the big guys. And now let's look at the RSP. This is an equal weight. They're starting to look alike. So maybe the broader is going to look better. In fact, what's kind of cool right now is the Qs, which have been on fire and have been leading for such a long time. If you look at the QQQEs, the equal weights, they are actually outperforming the Qs. So that tells me the market's broadened out. In fact, in wealth charts, I did ratio charts, which I could do here. Once Praveen makes the do-it-yourself ratio chart templates, I'd love to have a spider versus RSP and a QQQ versus QQQE, and then maybe a Russell versus the Qs, just to get a sense of what's working from a different perspective. There are 3 different ways, or 2 or 3 different ways I like to rank. On the sectors, I typically look at percentages, and then I look at the 2-day momentum. And if they don't line up, then I know that I don't want to look at the percentages because we're missing a big one. So let's just look at healthcare, finance, and I'm going to include technology. It had a 1-day bump, but over the 2-day time, its 2-day momentum is in second place. I picked three sectors as leaders of the market. These are the industry groups in those three sectors. You're not going to find energy, utilities, because they're not in the top three. Let's rank that by percentage. And I want the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Those are the top 10 industry groups in the top three sectors. I got 268 stocks. Let's kill those that are less than $5 and less than 500,000. I now have 126 stocks. Let's look at them. Now, you could rank them by percentage return. I've done that, but you get a lot of things like this that have big moves, but I don't. Some of these are hard to play. Oscar Health is a nice breakout. That's one way. Newsflash: my best trade of my life, percentage-wise. It's waking up, PNDM. I actually have it on my buy watch list. I'm not sure I'm going to buy it, but I want to watch it at least. So sometimes I'll rank it by percentage of change. A lot of times I'm going to do this FM2, the short-term momentum, because I eliminate little bumps that were one-day wonders. And the top stock on that, interestingly, was Tandem. And I'll go down the list and I'll look for anything that looks good. Now, in a market with lots of rotation, I might not find anything that looks good in these industry groups because a lot of these are turning around. Um, and, but I'm going to look at these and see if there's anything I like. And then the third thing, so I may rank them by percentage. I may rank them by 2-day. If you're a longer term trader, try 5 and 13, a little bit longer term looking at moves. You'll pick up longer moves instead of the short moves. But you know what? I like pullbacks and uptrends, so why don't I pick it? And then let's rank them by impulses. Here's my version of technical analysis versus the rest of the world. The rest of the world wants me to look at lots of stocks and bases to find the stocks that are moving. I want to look at stocks that are moving and see if any of them have good bases. And that's what I did here. So I've now ranked them. They all have to have a pullback and uptrend by my definition. Hold on, I got to put something in here. All right, hold on 1 second. I got to put my gate code in for somebody who's dropping off something for me. Gate code. All right, so these are the top stocks and the top industries and the top sectors. This on the bottom is the weekly bongo, on the daily top is the daily bongo. I want stocks whose weekly bongo is blue, so we know on a weekly that they flip to an uptrend. Here it's a short-term uptrend. We want to have a blue today on the daily because I know daily's in an uptrend, but it just flipped from a downtrend. The healthcare stocks are tough to buy here, the insurers, because they got clobbered, but you want to buy them when they're dead, not when they're on fire. And Warren Buffett did a big investment in United Healthcare, and that really turned this thing around. Here's United. Anybody want to bet where Warren Buffett did his? This is Warren Buffett day. He bought it here, it gapped up here, and it turned around the whole sector. So I don't like buying downtrends, but I bought CVS because I liked its chart. Humana's breaking out. Well, I'm in healthcare, and I know that Humana does Medicare Advantage. And I know that if I had to take Medicare, I'm over 65, but I don't take Medicare, I would never take Medicare Advantage. And what does it show me here? It says Humana provides a peek into its Medicare Advantage plan ratings and stock jumps. Yeah, their quality ratings went up, so their payments go up on Medicare Advantage. The reason why these things all sold up is because both rates went down. Three things: rates went down, their ratings went down, and their costs went up. And that's why all the stocks in this sector sold off. It was not just because somebody got shot. That was part of it. So maybe this industry is turning around. maybe I should be in something there. And Oscar came up already. SPNT. So Praveen, this is when I start to get the delays when I go back and forth. When I'm just looking at the charts, I don't get this is I like this one. You could tell I drew a line on it. I'm looking, oh, come on, I'm looking for a breakout above that trend line. And I look down here, I got momentum breakout in CPR, three dots. Slide I didn't like as much because it's an IPO. Maybe I should like it. RBOT, no, too far down. Intuitive Surgical, too far down. Now, I don't buy bottom fishing. A lot of you might. So you're finding stocks that maybe you've got a couple of buy signals. That's a John Person PPS buy, by the way. CPR, momentum breakout. Remember, we're looking down here. We want relative strength breaking up above the moving average. And it's hard to see there. And so that's one thing I want to work on to make it easier to know OBV breaking above. And I'll go down the list. Here's another thing that's kind of low. Insurance companies started picking up this week. They pay dividends, many of them. This one's been great, but it's getting extended. And I'll go through this and see, does anything look interesting? Now, Oscar, um, I have a cup and a handle and a breakout. Let's see if fundamentals look any good. I don't think, kind of ugly fundies. Revenue 308 is going to be compared to 242. I don't like the loss, but revenue's growing. The payer industry is improving. Maybe we should look at Oscar Health. So what do? I right click on it and I'm going to add it to my weekend buy list. So I look at it again and I'll keep going down the list. This is looks like a buyout. So you look over here and if you see anything about lawyers, you know it's a buyout. Well, maybe not. Maybe not a buyout. Maybe I need to look at this. Um, AI-powered tariff impact reports. Okay. And I would go down the list. Medtronic looks great. Is it buyable here? I'd have to go back and look at the long-term charts, but breakout, decent volume. So I'm building my watch list by going through this. Oh, I forgot to tell you something. This gray line, let's go to a stock that we know. Let's look at, let's look at Yamana. This gray line, which is all over the place, I think is at 63 today if I was to open up the chart some. Let me go to so here it is. And yep, there's a top. So it's at 63. Let's go into Galley graphs. Let's put, that was Humana, right? HUM. There's a 68. We're still, and we're close. When I went through about 100 stocks, we're within a couple of points on each. What does that tell you? That we just added, for your use, turned it on, IBD like. It's not IBD relative strength, it's IBD like relative strength. And it's now built into the program. That's pretty cool. And you could see it up here on the bar. It's, nope, I turned that off. We have it, also have it set so it can tell you relative strength up on the bar. I can have to remember what I did to turn that on. So that's top down. So I will go through and would probably look at all 126, and I would be adding those to my watch list that I thought looked good. And sometimes I find great ones, sometimes I don't. And I want stocks that look like the one I showed you, that older stock that I Ambarilla that I did my campaign on. That's what I call my options. It's like not one battle, it's a war. Travelers looks good here. Insurance, does it pay a dividend? I'll pick up the fundamentals, pays a 1.73, not much. It's insurance. You don't expect a lot of earnings per share growth. You want to make sure it's got enough revenue and earnings to pay their dividends. So I would go through, there's that Tandem again. I like Tandem here a lot, and I'll probably do something with it. But let's be honest, it's got the 200-day above it. It is not going to break through the 200-day on its first attempt. It is likely to, just like we use the 200-day for support on the way down, it becomes resistance on the way up. So it's a small time play, but you do an option trade with, and you sell 20, $25 calls. And if you run from, you know, close 15 to 20, 15 to 23, and you could develop a spread where you pay $2 and make $5. What I've been doing, and I've just been selling them right and left and putting the money in the bank. That's how I've gotten this return this year. All right, that's top down. I think we have better tools than anybody for that, to be honest with you, um, from a customizable perspective. And then let me show you what we added in some of the bottoms up. Now, the bottoms up is I can't help myself. Now, Praveen, I pointed out where sometimes it's hard to know about the relative strength, but everybody notice if you are above the line, let's look at Agilent. By the way, looks damn good, doesn't it? I think I talked about it 2 days ago because it had a double momentum signal right here and was viable. If it's a positive number, it tells you it's above. If it's a negative number, it tells you below. If you're not highlighting it, you could see green, you're above the moving average, and red, you're below the moving average. So to me, one of my secret weapons, and again, Chris Wilson, not used to live in Alabama, used to come to the HGSI meetings. God willing, he's alive and prospering. He's younger than me, so I expect he is alive and prospering. One day said, Jeff, when the weekly bar breaks above the moving average is when all the really long-term runs start. Hmm. We've incorporated now into scans, and every stock has it. And you know what? I like the daily too, because you want to find when the stock's starting to move, you're below it the whole way down, and it starts to breaking out, it gets above. You ran to here, and then you went below, and then it went above again. Here you drop below, and then it's turning up again. I think it gives you a lot of information. OBV and its moving average, you can probably forget who one of my friends down here that I stole that from. He didn't invent OBV, but the way he used it, he's moved on beyond OBV. So, and stole is the wrong word. It's a publicly available thing. So here we are. How do I do bottoms up? All right, kill my filters. We got 38. How do I make your life simple? Okay. First thing, we could do the same things. We can go pull back an uptrend, put my price and volume filter on. I want them above the 200, hit OK. I got 406, rank them, and let's go through them quickly. Titan Pharmaceuticals, something's happening, not my kind of stock. Cars is one that I should have bought because I was looking at it over here. Qubits, anybody in qubits besides me? This is my current campaign. It's nutso. Um, the whole quantum computing. Can you buy it here? Well, I have a cup and a cup and a handle and a breakout. Why should you not buy it here? Because God knows when they're going to make money. But the quantum computers are hot. You've got IonQ, you've got a number of them. Let's go down the list. PVA. They did some kind of an acquisition this week. But when I see pipelines, I think safety and I think dividend, 5.5%. Breaking out. Humana we looked at. Now we're getting the best. Atlas Lithium, don't know anything about it. It's a puny lithium play. Lithium's on fire. Just look at the, is it Lithium of the Americas, LAC, I think is one that the government's investing in. ARDT, Ardent Health Partners, I like the pattern breaking above the 200. I'm down to 10 minutes. You have momentum, breakout, volume, and a CPR. Notice The OBV crossed 2 days ago, and the daily crossed today, and the weekly crossed today, breaking out above the 200. This is an IPO clearly because the 200 doesn't populate the whole chart. Anro Neurosciences, these are, now we're looking at better charts that you could buy. Here's an energy play, um, too, too much movement. So, but we've selected now stocks that have pulled back in an uptrend. We don't care about their industry group or sector. All we care about is they're giving me signals. Shopify, breaking out. I think Shopify is very attractive here. Its relative strength is 91. What is it in daily graphs? Or it used to be called daily graphs 40 years ago, market surge. They got 93. Like I said, we're going to be very close on the relative strength. So I could go down that list and look at them one at a time, which I do. And I have so much fun looking at charts. I really do. It just makes me weird. Diamonds. All right. Thank you. I put a new buy sell signal on it. I introduced something a couple weeks ago called my, what do we call it? I have to make up names. I can't always remember my own names. This one, Praveen named for me. Dynamic systems, long and short. So it's a very short-term trading system that everybody has access to. And um, it's this thing right here. I'm going to hide it for now, but we have to do some more webinars to teach everybody what's in the program. ArcCat is one that we've been watching for a while because this one's got all kinds of legal issues, but nice uptrend breaking out there. So that's just ranking them by the number of movements. Another thing that you've all heard me talk about is the 2-day momentum buys. Best buy signal I've ever had. Nothing works on everything, but what you're finding are going to find are stocks that have 2 momentum dots in a row. And the only thing I can figure out about why this works is because most things after they pop, they retrace. And these are stocks that popped and popped again. And here's one I actually took at the open, or not at the open, but yeah, pretty much at the open on Friday, KULR. And why? Because I went here in the news and I saw one of my favorite words right now, battery. And then I saw they make batteries for defense and long-lasting batteries in our aerial, what do they call them? Our drones. Well, drones are hot right now too. So here's a drone battery manufacturer with a better story. And this, I couldn't buy that. Wait for the pullback and buy the breakout. That's what I did. Um, how do I know about this stock? Did I find it on Thursday? No. I ran it right after the open and it had the second dot. I mean, sometimes things work. Break it out. Axle looks like it's getting ready to run. So I find a lot of my buy choices here. So this is just one of my built-in scans. You got to play with them. Auto live, something's going on in the auto world because not only do these look good, boring old Ford. And Ford, whether they can pay it or not, has a 7.92% dividend. Um, AAD&T, we saw this one before breaking out. So scans are important. So let me just show you the last couple of minutes what I put in for everybody. I want to develop the perfect scan. We're not there yet, but we're getting there. So I've got the A plus scan. So let me clear. And let's drop down and let's look at the A plus scan. The A plus scan, let's look at one of the stocks. Here are the criteria for an A plus scan. I want OBVs and both relative strengths have to be above 1. But I don't have the daily RS more than 3. What we do here, that must be on the other one. I was going to limit how long ago it crossed, but maybe I don't want to limit it. I have to learn. I want to make sure it's got the 2-day momentum, but the most important thing is I'm marrying the 2-day momentum with the OBV and the relative strength. Awesome. So very quickly, what kind of things showed up? Rumble have big news. I think this thing's going to move. I probably wouldn't buy it until the 200 gets popped. Anro is a big move. Biotech, I'd have to look at it more. Mankind, gapped up biotech, pulled back and is breaking out again. This is the one I bought already. Axle, we already looked at. Dawn Biopharmaceuticals, again, if this was above the 200, I'd be very excited. Maybe I should buy the break above it. ALV, as I said, the autos are starting to do something. Seasonality is coming in good for these stocks. ADNT, this is the third time it showed up. Maybe I should pay attention to it. Or that was ARDNT, whatever. Breaking out. Travelers, I talked about before, breaking out. And then JHG, Janus Henderson Financials. All right. I think that this may turn out to be my favorite scan. I've got some more work to do on it, but I wanted to do something with one shot, brings up leaders. The other one I did is the A's, and I'm trying to go back in time to the pullbacks and uptrends in a squeeze with breakout signals. And so some of these will be the same, but all of these should be in a squeeze or recently, there's your squeeze, and now they're breaking out. There's within so many bars, little squeeze, and then coming out of the squeeze. And again, a different set of stocks. This is one that we've seen multiple times. And I want to build something that I only have to look at 1 or 2 filters a night. So I think there's a lot in this program, and it's not done yet. Um, Rob Hoffman always says he's just getting started. Well, I'm not just getting started. I've been doing it as he has for a long time. Praveen's just getting started putting my brain into the to the slide to the program. Now, what's the big reason why you come to the live meeting? Because what have I told you versus what have I not shared with you? And I think that's important. No problem, Randy. Um, what I've not showed you is how to take the trade. I've not shown you how I pick which options. I've not shown you how I pick which strike price. I have not shown you where I put targets and stops. Think seriously. This is not an expensive money when you think about what the opportunity is. Here's the hardest sell that I can do. I want more people. I look, if I start doing meetings and I can't get 10 people between live and online, then people that's a say tells me something. Um, but for 1250, you're going to walk home understanding everything that I showed you today. But the next step, which is, all right, I picked that one slide, that one stock to buy. I picked that K stock, whatever it was called. Let me just kill this. Go back in here. Why did I buy this? What was the spread that I took? Where is my target? Where is my expectation that I'm going to run to? And where did I put my stop? How much did I buy? Are all the things that matter more than what you buy. And that's what you get at the live meeting. So we're at time. I think I've answered most of the questions that people have. Um, I have my own style. It is based on CanSlim at the very beginning. It has been Woodwardized by Ian. And then I go to meeting after meeting because I keep wanting to make it better. And with Praveen, I've got this wonderful partner that's able to take what I learn and put it into the program. So we've got more to come. So thank you all for being here. I think I hit all your questions. Would love to see some of you live. And, if I got to 25 people live, which I don't know if I even want that, I get a bigger boat for the dinner because they're not going on my boat. So, and if it rains, we'll just go to a nice steakhouse as we've done before. You all have a great rest of the weekend. I have to say go blue, but as long as I'm not playing Ohio State, Stacy won't mind. And we'll see y'all soon. Thanks for being here. Thanks, everybody. And Joel, you said you want to come. Let me know what to do because I told you something that I would do for you. Thanks, everybody. I'm going to stop the recording and I'll put this